PayPal just reported earnings yesterday, and not only was it a very strong earnings, we'll talk about some of those numbers in a little bit, but they also announced something that changes the business forever, and it's the start of something new that they're going to expand upon for many, many years to go in the future. PayPal is a stock I currently hold, and it's a stock I've held for a little bit over 2 years now. I bought the bulk of my shares around $55 a share. And unlike I've heard some other people talk about, I don't necessarily view PayPal as a growth stock. Rather, I view PayPal as a value stock with a little bit of growth and with respectable EPS growth, okay? And the numbers can prove this when we look at the valuation metrics and the growth rates. The PE on a trailing basis is 14.67, and the gap forward PE is 14.26. The trailing PEG ratio is 0.8, and the forward PEG ratio is a 1.24. All of those metrics are considerably below the S&P 500, which has a current forward PE of 22.7. So PayPal's 14 forward PE is considerably lower than that 22.7, but their revenue growth is not lower than the average stock in the S&P 500. It's actually equal. 7% is the average revenue growth for an S&P 500 stock. That's exactly what PayPal just reported in their most recent quarter in Q3 just yesterday. Net revenue increased 7% year over year, up to $8.4 billion. But where PayPal is destroying the S&P 500 in terms of growth rates is in the EPS growth rate. The S&P 500 for Q3 2025 has a 9.2% growth rate in terms of EPS. PayPal just reported a 32% increase in GAAP EPS year over year, all the way up to $1.30. And on a GAAP basis, they had solid operating margin expansion from 17.7% in the year ago period to 18.1% operating margin in the quarter they just reported. So that's why I view PayPal as a value stock with some decent growth. Not only do they have more growth than the S&P 500, but they're also trading at a way, way cheaper valuation when you look at the PE, the forward PE, the PEG ratio, and the forward PEG ratio. So even though they've got some promising growth engines like they talk about here, they're building for an agentic future, partnering with leaders such as Google, OpenAI, which was just announced, and Perplexity. They've got those growth engines in their back pocket, but they're not going to become a major growth stock like we think about when we think about SoFi and Palantir and AppLovin and Robinhood. These companies that have 30, 40, 50% revenue growth, they're not going to be a company like that probably ever again in their life cycle, okay? But they are a solid value stock. And it seems like the management team is understanding this, and they're trying to make the shift to attract more value-focused investors to broaden the investor base that's going to consider PayPal as a stock they want to put in their portfolio. One of the ways they've already been doing this and attracting that value-focused investor is by doing crazy share buybacks while their stock is trading at those cheap multiples. So they say here in Q3 of 2025, they returned $1.5 billion to shareholders by repurchasing approximately 21 million shares of common stock. And over the past 12 months, they've returned $5.7 billion to shareholders by repurchasing approximately $78 million of the stock. But in the Q3 report, they announced something else that's going to get that value-focused investor on their side and consider buying their stock, and that is the implementation of a brand new dividend program with PayPal. Check it out here. Today, PayPal announced that its board of directors approved the initiation of a quarterly cash dividend program and declared a cash dividend of 14 cents per share payable on December 10th. This represents a targeted payout ratio of 10% of non-GAAP net income. That is a very, very conservative payout ratio, 10%. When we look at a dividend growth stock, we want to see a payout ratio below 60%. PayPal is way, way below that at 10%. It's a very good idea for them to stay conservative so that they have a ton of room to grow that dividend over time so that people's yield on cost, if they buy now, their yield on cost a few years from now is going to be way crazy. And that's really what a dividend growth investor is looking for. They're looking for a stock they can buy and hold for 5, 7, 9, 12 years, and then their yield on cost keeps going up and up and up and up because every single year that company is raising their dividend payout. PayPal is giving themselves tons of room to raise that dividend payout, and I think this could be a great thing for expanding the shareholder base that wants to hold PayPal. They're not in a hyper-growth cycle anymore. I'm not sure if they'll ever be in a hyper-growth cycle ever again, to be honest. It will be a great quarter if they hit like 12% revenue growth. That'll be a big time growth quarter for PayPal. And I'm not hating on that. I'm just saying they're not one of these hyper growth stocks like a lot of people like to hold in their portfolios. So I think it's important to set your expectations. This is not going to be one of those companies that doubles up over the next 12 months, in my opinion. This is not going to be one of those stocks where you're going to look back 18 or 24 months from now and you're like, dang, I have a 200 or 250% gain. That's not going to be the situation at all, but rather it's going to be a consistent grower. We've still got the buyback program, and now we've got that dividend. But there's one thing inside the fundamentals that is not what a value investor wants to see at all, and I want to talk about that real quick. It's in the balance sheet. So let's scroll down here in the earnings report to the balance sheet. We're going to look at the liabilities, and we're going to compare it year over year. First of all, cash equivalents, and short-term investments totaled $14.4 billion for Q3 of 2025. Very respectable. But the long-term debt total is $11.4 billion. And that is substantially higher than it was 1 year ago. Excuse me, $11.276 billion. I'm sorry. 1 year ago, that number was $9.879 billion. So to see about $1.5 billion more in long-term debt than they had 1 year ago, that's not what I like to see. If they were to take some of that money that they're using to buy back shares and to pay down some of that debt, that number would be very different. They used $1.5 billion of cash this quarter alone to buy back shares. They could have taken that $1.5 billion and paid down some of that long-term debt, okay? If you're trying to attract a value-focused investor and you've got your long-term debt number just keeping on going up and up and up and up every single quarter while you're paying a dividend and while you're doing a share buyback, that is not what a long-term value investor is going to want to see. If you're piling on debt, but you're growing at like 30 or 40 or 50%, like we see some stocks doing out there, that can be okay. We expect that those growth numbers are going to lead to crazy bottom line growth numbers in the future. That means they're going to be able to pay down that debt and manage that debt very well. But that's not what we have with PayPal. Yes, we have the bottom line growing very nicely at 32%. But the top line's only growing at 7%, okay? So for them to be piling on debt is not the best look, all right? So that's the only real thing that I don't like about PayPal's fundamentals. I wouldn't say it's out of control levels of debt accumulation, but it's definitely not ideal. So that shift towards becoming more of a value-focused stock through major share repurchases and now this dividend program, that is what I mean when I say PayPal will never be the same. PayPal is not going to be seen as one of these hyper-growth beasts anymore. It is not that stock. It seems as though the management team understands that and they're embracing it, okay? This can be really good for PayPal over the long term to find a new identity and build this shareholder base that's going to be a lot more loyal to them because they're getting those dividend raises every single year. Let me know in the comments below if you personally hold PayPal shares right now and whether or not you're buying more. I'd love to hear that in the comment section below. Does this dividend program get you excited to hold PayPal shares into the future, or was it a little bit of a disappointment because you know that they're not going to be able to retain as much money to invest back into the business? I want to hear about it in the comment section below. I appreciate you being here in a major way. Thank you so much. Have a great night.